a lot of people becoming substantially wealthier. Well, what do you think's going to happen on the 13th? Is this going to be lucky for XRP? I'm going to go ahead and hazard a guess that the answer is yes. I'll explain exactly what I'm talking about here, but before going further, I do want to be clear. Do you guys remember, for those of you that were around listening to my channel back in early 2024, do you remember me highlighting that when a new all-time high is hit, that if you fast forward about a year out, typically there are substantial gains like from that moment. So think about this. You're talking about hitting a new all-time high, and I know a lot of times people think all-time high, should I buy at an all-time high? That's usually the worst time to buy. Well, not always. In fact, data indicates that's certainly not the case. Yes, markets find peaks, but I was noting at the time that historically, if you buy at the all-time high, it's gonna almost always be up from, just based on data, a year later. So remember this, I highlighted this exact article. This is from January 8th, 2024 from Business Insider, titled "A Record High in the S&P 500 Would Suggest Double-Digit Gains in XRP." Reads in part, if the S&P 500 hits a new all-time high in 2024, expect a strong year of gains to follow, according to Ned Davis Research. The investment firm crunched the numbers and found that when the S&P 500 hits at least one record high in a given year, the year's median return is about 15%. So look, folks, I remember sharing that at the time and saying, we understand that if you're going to have a bull year in the stock market with those are risk-on assets, that crypto is going to move in tandem, and that will be absolutely fantastic for XRP. And then we did get that all-time high. Here was something from Lake Street in February of last year, 2024, reporting that it had actually just happened. They write, on January 19th, 2024, the S&P 500 hit new all-time highs when it broke through its previous high set on January 3rd, 2022. This marks a span of 511 trading days between consecutive all-time highs, ranking as the sixth longest duration since 1950. There have been a total of 15 instances, including the current one, where the S&P did not reach new all-time highs for a minimum of 200 trading days. The chart presented below illustrates the average performance over the 12 months following the preceding 14 occurrences. Of those 14 occurrences, the S&P 500 exhibited positive results in 13 cases with an average return of approximately 14%. So that means when you hit new all-time highs, it's not so bad. When markets break to fresh all-time highs, the next move to some, I get it, may not be so obvious, but again, history gives us a very strong clue. And this is great for XRP. Just hang with me. I'm going to fully explain why, because something else just happened. Well, you'll see in a second here. Look, in early 2024, again, the research from Ned Davis and others pointed out that after new all-time highs, the following 12 months have tended to deliver double-digit gains. And so, there's another study who counted past instances and found that about 14% average return wins out of 13 out of 14 cases. And so that is basically what played out, isn't it? After the January 19th, 2024 record, the S&P 500 was up roughly 24% 1 year later. And so for all the fear that was out there, and if you're there in 2024, you'll remember it, for all the uncertainty, I was like, guys, I'm going with the bet odds. I say the number's way more probable. I said, I don't know what's going to happen. I admit that, but it's way more probable number go up. And ultimately, that is what happened. And so then we get this. This is from JP Morgan. Rate cut breakdown, what you need to know now. And take a look. I want to show you the most important part of this article. I'm not going to read the whole thing. It's not necessary to get the key point across. But look at what JP Morgan wrote here. Since 1980, 5 of the 10 best years for the S&P 500 happened when the Fed was cutting rates without a recession. And then they cite the years. The Fed has cut rates 12 times when the S&P 500 was within 1% of its all-time high. The market was higher 1 year later, all 12 times, with a median return of 15%. Now, as of the time I'm recording this, I haven't gotten to see what happens with the Jerome Powell press conference. But like this, if he's assuming rates are getting cut, which is what everybody's betting on, please remember this. Nothing's a guarantee, and in the short term, market could be down anyway. By the time I get this, uploaded and a thumbnail created. It's going to be to whatever degree past whenever that happened, but it doesn't matter. Look what the data says. The Fed has cut rates 12 times when the S&P 500 was within 1% of its all-time high, and the market was higher 1 year later, all 12 times, with a median return of 15%. That's where we are now, folks. So assuming you're future people, assuming that the Fed cut the rates, which is a virtual certainty. So when the Federal Reserve cuts interest rates, the details matter more than the headline. So according to JP Morgan, every single time the Fed has lowered rates while the stock market was sitting within 1% of all-time highs, again, the S&P 500 ended up higher a year later. And to be clear, we're not talking about small gains here. In crypto you may think 15%. This is traditional finance. That's gigantic. That's above average for sure. Now, so why is that so powerful? Well, because when the Fed cuts rates while markets are near their highs, it's usually not out of desperation, okay? It's what's called a mid-cycle adjustment. It's like easing up on the gas rather than slamming on the brakes to avoid a crash. So in those cases, and again, that's where we find ourselves now, the economy is still strong. Companies are still growing. Investors remain confident. And that's exactly why markets have tended to keep climbing. So right now it's a 100% hit rate. And I'm not thinking this time's going to be different. And of course, nothing in markets is ever guaranteed. But, history gives us a very clear playbook. When cuts happen under these conditions, they've consistently opened the door to another strong run higher. Period. They just have. That's the truth. No room for debate. And given the setup we see right now, there's every reason to believe history could repeat. So what does this mean for crypto, and specifically XRP? Well, when equities rally, stocks, liquidity expands. Investors look for higher risk opportunities beyond stocks. That's where crypto shines. And XRP, of course, sitting at the center of discussions around real-world utility and institutional adoption, is perfectly positioned to benefit if risk assets keep pushing higher. The macro backdrop is shifting in its favor. So, if past is prologue, the months ahead could be very exciting. That's the point. That's the key takeaway. So you can tell me what you think is going to happen, but assuming, you future people, assuming that the rates are cut, and look, it's obviously a virtual certainty, this is what you have in store. But then you could be thinking, wait a minute, what about 4-year cycles? What about, because that would push us. I'm no math wizard, but it's 2025. You add 2, so 2026. Yeah, that'd be 5 years. What's going on with that? Yes, well, let's talk about that a little bit as well. In fact, here's a post just last night from Raoul Pal, former Goldman Sachs executive. He's the founder and CEO of Real Vision and global macro investor, a wealth of knowledge, a well-deserved over 1.2 million followers on X. Also happens to be an XRP holder, by the way. And last night he wrote the following. The weighted average maturity of U.S. government debt extended from 4 years to 5 years from 2022. That increases the chance that the liquidity cycle and the business cycle have extended too. Our lead indicator work at GMI, Global Macro Investor, suggests the same using our GMI Fin Conditions Index. Let's see. And so he is one of the few analysts I follow who believe that there is a very good chance that this entire crypto bull run spills over into 2026, perhaps as far out as the second quarter of 2026. Now, this is a minority opinion, but sometimes minority opinions are correct. It's just a few analysts I follow that believe this, but they're very reputable. You're talking Raoul Pal, Julian Biddle, Tech Dev, so they're just a handful of them. They could end up being right. But if that's the case, that would line up with rate cuts occurring right now, but then things still looking good 1 year from now. That would actually line up. This would explain a lot. And so, of course, I know that all of you listening, unless you're brand new to crypto, in which case, welcome to the party. I know all you know that crypto, of course, has been running on a 4-year cycle, and that cycle is tied to debt refinancing. And I made a video in great detail recently highlighting exactly why that is, but that's been occurring since the great financial crisis of 2008. And of course, to be clear, has nothing to do with the Bitcoin halving. And for a long time, even up to this very moment, it's been a very useful guide to figure out roughly when things might happen cyclically, right? But like I said, some intelligent and well-informed individuals think that's shifting. So that's why I've got this post on your screen from Rob Paul. So to be clear, what he's pointing out is that the weighted average of maturity of U.S. government debt, it has stretched from 4 years to 5 years since 2022. So that matters because it means debt rolls over more slowly, which in turn stretches out the liquidity cycle and even the business cycle. And so in plain English, the financial tide that lifts or lowers markets is moving on a longer rhythm than before. And they're using data to back these opinions. They're not just whimsically saying these things, oh, it's going to be longer than before. No, they're not. That's not what's happening here. They have actual arguments. And so if you think they're wrong, then you can challenge the arguments. I admit I don't know, but it seems rather compelling to this point. But again, this lines up with JP Morgan's data showing that when the Fed cuts rates, while stocks sit near all-time highs, it's the environment we're in right now, markets have historically been higher a year later. Every single time, folks. If that pattern repeats, equities rise in 2026 and crypto would certainly follow right along. As far as I'm concerned, that's basically 100% chance. That right there is why Raul has been saying, the crypto market again might not peak until the first or second quarter of 2026. It's effectively a 5-year cycle now, if that's true, instead of the old 4-year cycle. And when you add in today's bigger liquidity waves, institutional adoption, and the way that crypto now trades in sync with equities, the case for an extended cycle is certainly getting stronger. I'll certainly acknowledge that. Now, for XRP, think about it. For XRP, that extra runway could be especially powerful. Because look, XRP often moves later in the cycle anyway, so if the peak really does shift into 2026, that gives it more time to capture momentum from broader market liquidity and adoption trends. So this makes it more likely that some of the mid-range to higher price predictions from XRP analysts that I follow may end up being correct. That's why $30 XRP is not a crazy concept for this market cycle. I don't know if that's going to get hit, but it ain't crazy. I sure as hell do know that. Clearly, the best is yet ahead. So if this is dragging out that much more money, I mean, there's that much more time for people to figure things out. The money's still flowing, though. So bottom line, it's still happening. But if you're wondering, if things do drag out and you start wondering why is that happening, it's what I just said in this video. That's why. That would be the best explanation that I've seen so far anyway. It just makes sense. If the debt refinancing is one more year out, and that's just what it's been for years now, and yeah, that makes logical sense. So we'll see how things come to pass, but I just think that by the time this cycle's done, we'll look back, and yeah, some things, history rhymes with itself. Nothing's ever exactly the same, but we'll look back and be like, wow, that was one hell of a freaking ride. This was different. This was the same, whatever you can do post-mortem. But I just think we're going to be very thrilled with how this ultimately pans out. There's going to be life-changing wealth for a ton of people listening right now. Of that, I am absolutely certain.